Guys, did you know that Warren Buffett is 91 years old? Like, the most impressive thing about him is not the fact that he's a really wealthy investing genius, but the fact that he's managed to stay on top of things and relevant for 8 decades. Like, the guy started when he was 11. And I think that really reinforces the fundamentals around investing and reminds us of it, which is that investing is about first principles and human psychology, which honestly stay constant and true no matter what the times. So, Warren Buffett, super rich guy, also CEO of Berkshire Hathaway. About a month ago, Berkshire Hathaway had their shareholder meeting, the famous shareholder meetings that they have in Omaha, where he shared a bunch of his thoughts about what's happening in 2022 and how people should deal with that. So what I thought I would do in this video is summarize the biggest takeaways from that and help you figure out how that should impact your portfolio. Hey guys, Jessica here. Before jumping into it, really quick call out that we're Uprise. We're a VC-backed fintech company that is building the best financial plan experience in the world. One number, 1.5 million. That is how much, on average, we've been able to find and add to each customer's lifetime net worth. And the way we do this is by looking at people's specific situations and then help them find optimizations from credit cards, to paying down debt, to looking at employer benefits, to investing, and everything in between. All of the plans we put together are completely personalized and also 100% free. So to get your plan, definitely check us out. I've linked to us in the description below. And also, if you get value out of this video, please give us a thumbs up, hit that subscribe button. It really, really helps small channels like ours. Okay, getting back to it, these are my biggest takeaways from what Buffett said at the last shareholder meeting. Number 1, focus on the long term. Number 2, think about investing in productive assets. And number 3, avoid crypto. And number 4, when dealing with inflation, invest in yourself. I'm going to cover each of these in more detail. Okay, so the first one, thinking about the long term, I think this is one that a lot of people know in theory, but it's still really hard to actually do, especially like getting our brains to think that way when the markets are completely red or your portfolio is a third the size it used to be or whatever. And Buffett shared a really good example of this in the last meeting. So quick context, Berkshire Hathaway holds a lot of cash, and this is something that they've gotten a lot of flack for. Specifically, like, cash is something that generates little to no return, and in fact, probably negative returns in an inflationary environment. So if you wanted to maximize your investing returns, then why hold on to so much cash? And the way he described it is that he sees cash as a strategic asset, basically so that Berkshire Hathaway can handle whatever gets thrown at it. He explained that it's like similar to oxygen, in the sense that if you ever run out of it, then you're screwed. Basically, he's intentionally leaving money on the sidelines for the short term so that he can make sure his company is around in 5, 15, 100 years and really maximize returns for the long term. And I have a ton that I want to say in terms of how this applies to our individual portfolios as well. Specifically that, like, having cash set aside, having an emergency savings fund actually makes us better investors over the long term, maximizes our returns. There's a lot more there, so I won't get into it here because we did a separate video about that. I'll link to that up here if you want to go check that out. Okay, so the next 2 points are related. Focus on productive assets is the first one. And what a productive asset is basically an asset, an investment that produces value. And what I mean by this would be like if you owned a building and then you rented it out to tenants, then every single month you're getting rent. That is an asset that is producing value. Or you owned farmland and you're growing crops and selling those crops, then that is also an asset that is producing value. Stocks and bonds are also assets that produce value because that's money that you're putting into a company that is building stuff, making stuff, and selling that and producing value. Famously, he does not believe that crypto is a productive asset, which leads me to the next point. To put it mildly, Buffett is not a fan of crypto. In fact, he specifically said that if you were to give me all of the Bitcoin in the world for $25, I wouldn't take it because what would I do with it? He doesn't think crypto is a productive asset. He doesn't think it produces additional value. Charlie Munger, who is the vice chairman of Berkshire Hathaway and also investing legend, had a lot of harsh words to say about crypto as well at the last meeting, so a lot of that came through too. Personally, I have I think, a more nuanced view on crypto. But regardless of anything else, I think what is true is that crypto is super risky. And I think if you look at short periods of time, it's hard to see it. But if you look at the long term, you can definitely see that there's a lot of risk in crypto. And so make sure that anything that you do, you go in with eyes wide open, that you've done your research, you're comfortable with the potential ups and downs and stuff like that. We did a separate video series about crypto, explaining what it is, how it works, how to get into it. If you are curious about that, you could check that out up here. Okay, so that brings me to the last point, and it's also my favorite point, which is people wanted to know what he recommended in terms of dealing with inflation. We see it everywhere these days, right? Like, inflation is through the roof. His advice is to build up your own skills, invest in yourself, because in an economy where prices are going up and up, investing in yourself is the smartest thing to do. Meaning, if you build up skills in things that other people value, then you'll always be able to find somebody to pay you for that, and you'll always be okay. And the reason this one is my favorite one is because I feel like there are a lot of emotions right now. What the market's doing, what might happen to my job, what might happen to my company, all of this kind of stuff. And ultimately speaking, you can't control a lot of that, right? You can't control how the markets do and this kind of stuff. So focus on what you can control. And the thing that you can control is investing in yourself, right? Building up your skill set and making sure that you always have options no matter what happens. And I think, anyway, for me personally, it was a really good reminder, because definitely, even though I'm in this day in and day out, definitely also get caught up in a lot of the emotions sometimes. And that's it. Those are my thoughts, my takeaways on the last Berkshire Hathaway shareholder meeting and Warren Buffett's latest tips. I would love to hear what you guys think as well. If you have any takeaways of your own, let us know in the comments below. Also, if you'd like more support with personal finance, definitely check out Uprise. I've linked to us in the description. We put together personalized Wall Street level financial plans completely and 100% for free. So if you have any questions about your portfolio, your budgeting, paying down debt, employer benefits, whatever it is, we'd be happy to help. And on average, we found $1.5 million to add back to each customer's lifetime net worth. Other than that, if you got value out of this video, please give us a thumbs up, hit that subscribe button, and click the bell for notifications. I'll see you guys next time.